Okay. Alrighty, good morning and thank you for joining us for today's webinar, the Ohio's 2-week sales tax holiday, your business readiness check. I am Kate McEwen and I will be moderating today's session. Before we get started, there are a few housekeeping items to cover. If you have any questions during today's presentation, you may enter them into the chat box on your screen. We'll try and answer as many questions as we can at the conclusion of today's presentation. However, to be respectful for your time, we know that we'll not be able to get to them all. Therefore, following today's webinar, we will review all questions and send out answers via email as soon as we can. Today's webinar will be given by Joe Pop and Kathy LaMonica, principals on RAY's state and local tax team, and they will prepare you and your team for your sales tax holiday 2025. Welcome, Joe and Kathy.
Hello, welcome. Thank you.
Hi, guys.
So I'm Kathy LaMonica. I'm sales director for RAY. I specialize in sales and use tax and mostly on the compliance, technology consulting, and other various state and local sales and use tax issues. Joe?
I am Joe Pop. I'm an attorney. I also work in state and local tax here at RAY, principally on the consulting and controversy space. So before things break and then after things break is usually when I get involved with folks. So we've got a good presentation for you today. We don't have a whole bunch of slides, so we're just going to be talking about stuff. Kathy is going to be leading us off, so I'm going to turn it back over to Kathy, and then I'll be sort of color commentary in a couple of specific areas that I'll tell you are, even for sales tax nerds like myself and Kathy, pretty interesting, I'll say. So Kathy, you want to get us started, and then we will take your questions. We're going to try and go like 10, 15 minutes to just get through some of the basic stuff, and then we'll start taking questions. So if you're putting in questions and we're not answering them, it's okay. We're going to get there.
Yeah. Thanks, Joe. So I should have said welcome to our second annual Sales and Use Tax Ohio holiday webinar, because we did this last year. Unfortunately, I think we did it the day the holiday started last year, so it didn't really give people a lot of prep time to kind of get going and figure out how we can maybe take care of things before the holiday starts, make sure everything is in place that needs to be in place, make sure we understand the rules. And it was kind of all of a sudden we had to deal with this, and it was unlike previous sales tax holidays for Ohio. So I think that was the biggest thing last year. Was it wasn't just about books and school clothes and back to school clothing and stuff like that. It was about everything for tangible property under $500. And it wasn't just a weekend, it was, a 10-day period. So this year, again, we had to wait until Ohio confirmed that they were actually going to go through it again and make sure nothing had materially changed, which it really hasn't. But we're going to highlight, what it is again, when it is again, and then go through some of the common scenarios and questions that came up last year and how to address it ahead of time. So last year, I think it was a 10-day period. This year is 2 weeks. So this year it is running from Friday, August 1st at midnight through 11:59 on Thursday, August 14th, 2025. So for those of you who remember last year, it crossed 2 months, which from a compliance perspective made that, a lot crappier for most people to have to deal with. This time it's only in August. This time it's 2 weeks. And the thing I wanted to note about the time frame is it's where your seller is located. So if you think about that from the terms of, if you're in Ohio selling to Ohio customers, we're all in the same time zone. It doesn't really matter. If you're purchasing something, though, from an online e-commerce website who's sitting in California, their sales tax holiday won't start until 3 hours later. So if you're, surfing at 1 a.m. and you want the sales tax holiday, but the internet provider or the e-commerce provider is in California, it won't be applicable for them yet. So keep that in mind. Same thing on the tail end, that it's where the seller's located. So, but I think also keep in mind, out-of-state sellers may not have the capacity or the knowledge or the understanding or even be aware that Ohio is having this. And it's okay if you want to ask questions and push back, because they shouldn't be charging you tax on these items. So that's just a little bit about the dates. Also, one of the biggest questions last year is, can a business opt out of it? No, you absolutely have to follow the holiday rules. You can't choose to just keep charging the tax because it's too complicated to change it. It is a mandatory compliance aspect that you have to do as a retailer in the state of Ohio or outside of Ohio into Ohio. So,
one thing I'd add to that point is, so don't assume that if you're a consumer and you're looking at this from a consumer's angle, not everybody is going to have this all the way online, perfect, August 1st, at 12:01 a.m. local time. Like, give them a little bit. Some people are just finding out about this. It is the second year that Ohio has had this kind of sales tax holiday, as Kathy mentioned. So if you're looking at a purchase, maybe give it to, August 2nd, August 3rd, maybe try and, think about that in the middle part of the sales tax holiday. And then on the business side, realize you're going to have consumers who are going to be buying stuff throughout that whole period. And it would be nice if you could kind of get everything baked by August 1st so that it's consistent throughout. And you don't have some consumers that are like, hey, I was here the other day and this happened and it didn't happen this time, or, vice versa. So just for consistency and avoidance of reputational issues, you do want to try and get this done, and baked, whatever you plan on doing with it, by the August 1st kickoff.
Absolutely. So what items qualify? Pretty much anything that's tangible personal property, something you can hold, feel, touch, that's priced at $500 or less qualifies. Electronics, clothing, all the obvious things that you would think about walking into a store, but also the things you might not think about when it comes to, business to business purchasing and things. One of the things that I was talking to yesterday, it was a manufacturer who's buying safety gloves. They're normally taxable. You buy it during the holiday, they're not taxable. So things that you wouldn't typically think of are things you should kind of think outside the box and think, what can we buy during this holiday and save us some sales tax? What things don't qualify are pretty much the same as last year as well. Anything over $500. So if it's $500.50, it's not going to qualify. If it's a motor vehicle, anything that's titled, boats, outboard motors, alcoholic beverages, your typical sin taxes, tobacco, alcohol, vaping, any marijuana products, those all remain taxable during the sale. And then also taxable services, but I have a caveat there because we're going to talk a little bit about how that typically taxable service may be able to be exempted under the right scenario and the right circumstances. One of the things that came up a lot last year from clients and related parties was restaurants and how does that affect. This applies to restaurants. Anyone who knows they go to a restaurant to dine in, if you're sitting in a restaurant, you get charged sales tax on your food. During the sales tax holiday, you still get taxed on your alcohol purchases, but you won't get taxed on your dine-in food. So we'll talk a little bit about restaurants and what other specific things they need to worry about going forward.
One additional thing that you might not think about, and hopefully this will happen for all of us. If you're buying a license, an app on like the Apple Store, that's, for Ohio purposes, that's tangible property. And so that annual license, if you buy it within the period, Apple is supposed to remove the sales tax on that. So we'll see if they do that, but that is something technically that they should be doing. So if you're looking at an app like a language app or something else that you might be buying, and it's a little more costly, that's a way to save some money, is to check that out and see if that'll happen during the holiday. It is supposed to, but again, as Kathy mentioned, the level of understanding, compliance, and all of that for different businesses are just going to be different.
Right. Yeah, and I think what came up last year a lot were sort of the distinctions on something like Joe just mentioned with you're paying, if you get an app and you're paying up front, you're paying for a year membership, but you're paying the sales tax up front. So if that sales tax is assessed during this period of time when you're purchasing it, it doesn't matter that you're paying out through the rest of the year, because you're still getting the sales tax break because you're purchasing it now. And there is a lot, and we'll go into that, regarding, layaways and back orders, and the timing of things does make a difference on some of these things. And that's what I think where people get kind of thrown off by, well, I bought it 2 weeks ago, but I'm picking it up now. Why can't I get the sales tax break? So there are timing differences you have to be aware, and that's where your customers are mostly going to come at you and say, well, I don't want to pay for it until 2 weeks after the holiday. Well, then it's technically going to be taxable because you're not paying for it now. You're just ordering it. So you have to be careful about those logistics and the way words are written. And I think that's what makes the whole thing way more complicated for people, because the way the rules are written by Ohio, even if you read the FAQs, you're still going to be like, what are they saying? What exactly are they saying? And how do we work it? But that's what we're here for. So we're here to help. So let's just get into, I would say, some of the common questions that we had last year about, when you have certain scenarios. One of the things that came up a lot, what if I sell taxable and exempt products on the same invoice or the same order? Something like I'm buying a piece of electronic equipment for $800, but I'm also buying some cables separately for, $50. So the $50 cables are exempt, right? But the $800 piece of electronics are not. So how do I handle it? Is the whole invoice exempt? And it's not. It has to be on the line-by-line basis. So it has to look at those things individually. So you want those invoices to be separately stated so that it can be applied appropriately. If there's shipping on those kinds of things, what happens with the shipping? Because shipping is typically taxable in Ohio. Shipping in this scenario would have to be allocated, the taxable piece versus the not. For the non-taxable, piece that you're buying, the shipping wouldn't be taxable. For the taxable piece of equipment that's $800, that would be taxable. So those kind of get into those scenarios of, I have a bunch of products, like everything is treated individually, and it has to be, illustrated that way in the invoice or on the receipt, so that the tax can be appropriately applied. But Joe, do you want to fill in, where we get into the bundled versus separate item type of sales?
Yeah, I mean, that is honestly, on the business to business side, that is one of the most incredible opportunities or maybe dangers that we see. And, just to reference something that Kathy just went through, because it's so important, is how you invoice stuff. And this applies outside of the sales tax holiday too. Just normal business to business, transactions that you have throughout the rest of the year. How you invoice or don't invoice something can really change the sales tax, correct treatment. And Kathy and I deal with that all the time, for taxpayers. So we're highlighting it at this particular junction because the potential is zero tax, which is awesome. But during the rest of the year, these issues are still present, whether you separately state stuff or you sell them as a unit, as I'm about to go through. It can make a difference for sales tax, particularly on bundled things that are multiple things together on one invoice. It really makes a difference. So let's talk about that item that Kathy referenced, which is these unit versus separate kind of items. And I'll use the restaurant just as a very quick example, then we'll talk more about restaurants later. Imagine that you're going out to a restaurant. It's fancy, you're getting a bottle of wine and a steak, and someone gets salmon, and someone gets salad, someone gets a dessert, and you're all together in a group, and you get one bill, and the bill, lo and behold, is way over $500. But each of the individual items on there are under $500. As Kathy had mentioned, the alcohol is specifically, excluded from the holiday, so you're still going to pay sales tax on that. But all of the other items on that are separately stated, as Kathy mentioned, that are under $500 by themselves will be exempt, right? Even though if the total bill is more. So the restaurant, you can kind of wrap your head around that, and you're like, okay, all right, got it. Think about a wooden table. So we have a wonderful Amish woodworking community. They do a lot of great stuff. So imagine that you're out in Berlin over this holiday period, and you're looking at a table and chairs, right? Custom made Amish table and chairs. The table itself, probably over $500. The chairs, usually going to be under $500. So what's the difference if I sell you a table and chair set, or I sell you a table with 6 chairs, or 4 chairs, or 2 chairs, or 8 chairs? Well, under the rules that Ohio has put out, and I should mention, this is all Ohio tax. There's nothing, none of this stuff is in the actual legislation. It's just what Ohio tax is doing with it. So I'll go through this and I'm gonna kick it over to Kathy for some other comments on this. But imagine that you're going out and you're getting this table and chairs. If you invoice the table and chairs as a unit, table and chair set, table plus 6 chairs, right? And it's one price. There's no differentiation on the actual invoice for the price of the table and the price of the chairs, even though there's 6 of them. That invoice would not be part of the holiday because you've invoiced it together as a unit. That's not allowed. If, though, you go out and you buy this table and chairs and you say, you know, I don't really need 8 chairs. I don't know that I even need 6 chairs. I want 4 chairs. Can I just buy the table and then 4 chairs? And they write it up and you have the table and then you have the 4 chairs at, you know, whatever it is, $250 each, times 4 is $1,000, right? Plus the table. Now each of those chairs can be part of the sales tax holiday and you don't have to pay the sales tax. But it depends on how the vendor writes it up, right? So if you're the vendor, realize that the way that you invoice, either historically or during this period, can really make this difference, right? And it may be difficult for you in your system to unwind that. That's something that Kathy and I can help you with if you're planning on having a lot of sales during this period, and it would be worth it, you know, to spend some money to do that. But that is an introduction to that particular topic. One more thing, and I'll kick it over to Kathy. In the frequently asked questions, they also say, well, what if I'm selling a pair of skis and I sell the pair of skis for over 500? Can I separate those out? And so you can see, and the answer is no, you can't. And so there's a little bit of separation there between the table and chairs, the restaurant, and the skis. So Kathy, anything you want to add on that? And we can go one step.
Yeah, no, I mean, it is, you know, you have to think about it consciously. I think I had the question last year of whether a bed frame that comes with, you know, 4 metal pieces that you got to put together, could they individually sell those pieces? No, they're meant to be sold as a package as the one thing. But, you know, a bedroom set, you know, the dresser is separate from the bed, from the, you know, what wardrobe. You have individual pieces, and those could be separately and have the tax applied to that. We actually have a question from the audience, and it's applicable to this topic. The person asked, we sell steel packages for their homes. Do we need to look at each item that makes up the package, or is the package considered one item? Invoices list all the line items. Joe, would you say? Yeah.
It's a great question, and you know, interestingly, I've seen that question before, I think. But let me give you how I would analyze this. Again, all we have to go on is what Ohio tax has put out. These things have not been audited yet. We haven't had a period of time long enough for Ohio to catch these in their audit process. So we're all kind of working with what we have. So let me share 2 items that I think have a bearing on this question that are in the frequently asked questions. In the pair of skis example, the specific language that Ohio tax uses is, no, you can't split items that are normally sold together. So they tell us that. Okay, all right. Later, though, they talk about components. And so another frequently asked question answer says, well, if you normally sell it as a unit, you must keep it together, but components that are normally priced as separates can still be sold that way. And so to answer this question about the steel packages for the homes, so if you never ever sell anything but a package, right? There are no options to buy anything but the unit, the package. Let me go back to my other examples. You do not have an ability to buy a separate chair. We don't sell chairs separately. We only sell them in packs of 6 or 8, along with a table. There are no other options. There, you don't have those separate components that are potentially just added together on the invoice. I think that one would be outside the holiday. Let's go to the restaurant. Okay, at the restaurant, everybody can order what they want, but what if we have a price fix menu? And when I mean price fix, I mean more like we have a party of 10 a wedding party, it's for this price, and everybody can pick like steak or chicken or salmon and then whatever, but you don't get those things separately. It's one price, right? Because you're doing this this wedding package, you know, for your party. There too, I don't think that you would be able to exclude those from the sales tax holiday because they're a unit and there are no individually listed items. So for this steel package, I guess the thing I would say is it kind of depends on your historical practice. It also depends on your practice right now. Ohio tax doesn't want you to change stuff just for the tax holiday. I get it, right? But if you said, hey, it's July 9th and I want to change our practice so that I can take advantage of this holiday, and then I happen to continue that practice all the way through the rest of the year, I think you got something, right? Those are the kind of projects that Kathy and I are helping people with right now to kind of get ready and position yourself. Because again, this whole thing is, we don't know what Ohio tax is going to say. We have what their frequently asked questions is. These things haven't been sent on audit review. There's nothing in the actual legislation. So we're doing our best to come up with what should be the answer indeed. There's going to be more and less that you do to make yourself safer, conservative, or aggressive if you're going to do something like that on like a steel package. So for the person who asked that question, definitely call us. We can definitely help. We can give you an idea of like how much risk would it be just based on what you got currently, and then maybe you modify some stuff if you're okay with that and your clients are okay with that, and that would put you in a better position to be able to harvest some of these tax savings.
Okay, and again, we could talk for hours, but you guys don't want to sit here and listen to us for hours for this, so we should probably keep it moving. I do want to talk about, but that was a great question, and this is what we see largely from our client base. But pricing, you know, I said, you know, it has to cost $500 or less is qualifies for your exemption. Can I offer discounts to my customers to get the price under $500 to bring them in? Absolutely, you can do that. There is no rules against not doing that. But do like manufacturers' coupons or rebates allow you to sell it tax-free? And the answer is no. If it's a third-party rebate, manufacturer's discount that comes after the sale, like you buy the product and then you send in your coupon and you get your money back, you still, if the price is over $500, you're still charging the $500 tax, or the tax on the $500 purchase, regardless of what they're going to get back from the manufacturers. But if you provide a discount to them to the store as part of the store, that absolutely will reduce the price and make it applicable to the tax exemption. And then how are buy one get one free promotions handled? They're not treated, they're not averaged out, so you don't get to bring it down. So if the first item is over $500, it's taxable, and the second one there's no cost for it, but it doesn't bring it down and make it, you know, less than $500. So keep that in mind. One of the other things I wanted to mention was returns. We heard a lot about, you know, what happens if I buy something during the sale process, or sales tax holiday, I get the discount, I, you know, go back after the sales tax holiday and return it. If I'm getting the same item, if I'm just replacing that item, the sales tax would still, the exemption would still apply. If I return it for a different item, you get charged tax on that new item as you normally would outside the sales tax holiday. So that's something to keep in mind. There was another point that I wanted to make about that, and I'm trying to remember what it was right now.
And I think, Kathy, it might be a different one, but I think I was reading through the FAQ, and it also mentioned if you return it for an in-store credit.
Yeah.
Right? The in-store credit, when you then go to buy it, if the in-store credit is used to buy something inside the sales tax holiday, then the sales tax exemption would still apply. Exactly. But if it's after, then you wouldn't get it.
Right. And there could be a situation where you buy something during the sales tax holiday, they charge you tax on it, and it shouldn't have been charged. You can actually go back to them and have them remove the tax from it within that sales tax holiday with your receipt, because you shouldn't have been charged it in the first place. So, you know, just things to keep in mind as a consumer as you're out there buying stuff on your own, but some things that came up last year. do we want to talk about, well, let's talk about online sales and out-of-state e-commerce clients a little bit, just because that came up a lot, because I think people, and we kind of talked about, you know, they're on a different timeline potentially, and they may not, you know, pay attention to the sales tax holiday. And it also plays into sort of the business-to-business purchasing, because if you're buying from vendors online for your business and it's something that's typically taxable and they don't apply it, or they normally would charge you tax but they don't know about the holiday, you know, how can you address that? And you have to be aware of those, you know, the holiday and what it impacts, and if what you're buying should not be taxable, you absolutely need to make those decisions and address it with the vendor. Or if it's something you normally self-assess use tax on, like we have a lot of manufacturers, people who buy things, they don't pay the tax to the vendor because either the vendor doesn't charge it, but they know what they're using is still taxable. During this holiday, any of those purchases, they would not have to self-assess use tax on. So, and I know that goes down a different road than a sales tax, but it's something that's totally applicable from a business perspective. Joe, do you want to jump in on any other use tax side of the things, or?
Well, on the use tax side, yeah. So in the actual legislation, this piece is one of the few items that is actually in the statute, which is the sales tax holiday exempts the item that's purchased during the holiday, you know, subject to the limitations under $500 and all that. It exempts it from both sales tax and use tax, right? So if you have this in this period, you'll be exempt both at the point of purchase, which is the sales tax portion, as well as use tax. Now, most consumers don't really deal with use tax. It's really more exclusively business for the most part. But here's a word of caution for you all who are planning on using this business to business and claiming that exemption from both sales tax and use tax. In a use tax audit, you're going to have to prove when you purchased these items. And you're going to have to prove that you purchased them and you're within, you know, all the little check boxes of the sales tax holiday in order to survive on the use tax audit side. Even though it's totally above board, you're doing this, you shouldn't accrue use tax if you're a business because you bought these items and they're not subject to sales tax or use tax. On a use tax audit, you've got to prove it. So please, you know, to help folks like me and Kathy when we're defending you, if you happen to get audited for use tax in Ohio, make sure you've got a pretty good system to save those receipts, the printouts from an online purchase, the POs or the whatever, and it should detail the time that you placed the order, time you paid for the order, and then, as we'll talk about in a little bit, when you actually received the items. So you want to get all of that information and save it along with whatever documentation system you're using for just normal purchases. Make sure you save that stuff for the use tax audit specifically, because otherwise you have this, you didn't pay the tax, but you end up getting dinged on it on the use tax audit just because you didn't have the documentation.
Yeah. And another thing that popped up, and you know, a couple of these things, it struck me that I didn't recognize this last year, and I was seeing it for the first time. But you know, rental of equipment, like if you rent a forklift for a day and it's under $500, typically that's something that would be taxable. It's not taxable during the sales tax holiday. The services that I alluded to in when we first started talking was about typically when you have your car repaired, or if you have an installation of product, the installation labor or the repair labor is taxable in Ohio. During the holiday, if you're buying or having something repaired and there's parts associated that you are buying with the repair service, that repair service actually becomes exempt through the holiday because there is a sale of a part associated with it, or a sale of something tangible that fits under that exempt $500 amount. So again, it has to be separately stated. The actual parts have to be less than, you know, $500, but the labor will then be associated with it, will be exempt during this holiday. That's kind of something that's a little nuanced. I actually saw an example of, it was like an oil change or like a car repair. Like if you have one lump sum oil change, there's no listing of parts, there's nothing, it just says oil change, includes parts and labor, that's still gonna remain taxable during the holiday. But if you have a car repair shop and you have, you're buying 4 tires and you have the tire installation and another part, and those things are all line items separately, and the labor is separately stated, the labor associated with any of those parts under the 500 would be also exempt. So again, this comes back to, can a system, I'm not picking on Mr. Tire, but can a Mr. Tire handle that and make those changes during this holiday? But that is the actual, the way it would work. But if you just hire someone to mow your lawn, which is taxable, that's not going to be exempt. So that's a taxable service that remains taxable because there's no associated sale of property that's related to that service. So it's one other aspect that I don't think we focused on last year, and I'm not even sure if that was the rule last year, but this year it was highlighted to me, and I thought that was a very interesting one for those service providers out there, how this would affect you as well.
And, on that same concept there, it's because some of those services the taxability are dependent on the tax status of the thing, right? So like if I'm doing an install, but the install is an exempt manufacturing machine, the installation labor is also exempt. Why? Because the machine is exempt, right? And so that's where this came about this year, is looking, a little bit deeper to say, well, if that particular item is exempt, then that labor is exempt. Kathy had a great example on the landscaping side for if the landscaper sells you 20 bags of mulch and separately states it and puts the dollar amount per bag of mulch, because he's selling you that product, that mulch would be exempt, but his service would not be, because landscaping services is a different type of tax. That's one of those where like you have to really ask Kathy and me, but install taxable, landscaping could be exempt under this, but landscaping probably not, right? Just because the service itself isn't dependent on anything else being sold. The service itself is taxable, where something like a repair labor or installation labor, those are dependent on whatever it is that's actually being repaired or actually being installed. So it's a rabbit hole that you can easily go down and get lost for a couple of hours. I did think we should do this for 3 hours, but Kathy rolled me back and she was like, people don't want it for 3 hours. So,
only we're that crazy. So I do want to touch upon back orders and rain checks, and I know we kind of touched on it a little bit, but items on back order during the holiday do not qualify for exemption. So if you put in an order, it's not available, your credit card is not going to be charged until it actually comes in, then it's not applicable to the holiday. If likewise, but if a back order was available suddenly during the holiday and you actually purchased it, then it would be exempt. So if you ordered something 3 weeks before the holiday and it came in and your credit card was charged during that holiday period, that would be subject to the exemption. So that some of the timing differences make it really challenging to understand. I read these things over and over again just to make sure I really understood in my head what was Ohio trying to get at. I think they want the product to be paid for during this period of time. And when you walk into a store and you buy something, it's simple. You're paying for it right there. There's nothing. But if you're, ordering something online, it's not in stock, it's not going to come in until after the holiday, the sales tax won't apply. And I think we talked about this a little bit on the business-to-business side, because if you said, okay, I'm going to pre-buy all my bolts that I'm going to need for whatever I do for the whole year, you have to pay for them during the holiday in order to, you can't say, I'm going to put in an order for 1,000 bolts, but I'm not going to pay for them until, 6 months from now. That's not going to work. So I think if you try to think of it in simplest terms, if you focus on when the payment is being made, that's going to make a difference. Because if you order something and it's just going to be delivered in a week after the holiday, but if you've already paid for it, it's just going to take that long to get to you, that still counts for the holiday. It's more like they say, sorry, this is on back order until November. You're not going to get the sales tax holiday for that. Joe, anything to add on back orders?
I'll tell you, this is the most exciting stuff for me. You know, you'd say, oh, how is this stuff the exciting part? It's the rain check rule that they've listed, the layaway rule, and the online rule. Oh man, I'll tell you, I think there's some opportunities for taxpayers in these rules. And let me tell you why. Kathy was absolutely correct. I do think that it is about the payment. That is what Ohio Tax is really focusing on. But they're not consistent. And in the inconsistencies, I think there's some opportunities here for people that want to exploit this rule a little bit. Again, call us if you have something you want to try or that we can help you do. Don't do it on your own. Little tiny changes can really make a big impact. Let me tell you why though. The layaway rule says items that are placed on layaway or picked up during the sales tax holiday are exempt from tax. Again, assuming that you meet all the other rules, right? Placed on layaway. The sale has concluded. I don't get possession because I haven't paid for my layaway, nor have I made full payment. I have a payment plan, and that is concluded within the sales tax holiday, but I do not have full payment. This is inconsistent with all the other things that Ohio Tax has put in there, right? So like on the online side, it says items that are paid for, the order is completed within the sales tax holiday. It's available for immediate shipment, whatever that means. I'll tell you, if you're not Amazon Prime, it's like a week. Sometimes you have to wait before they even ship the thing. So immediate shipment, but delivered afterward is okay. So if you read these three rules together, I think that there's some opportunities on the business to business side, as Kathy mentioned. I don't know, for general consumers, don't worry about this stuff. Like this is not really meant for you. But if you're looking at trying to like buy all of your steel for your buildings or all your bolts for your somethings, again, I think there's some opportunities here to, within the rules, really save some significant tax. It's not without risk, of course, because again, this is all untested. And I believe even the department is inconsistent in how it's providing some of these rules conceptually.
Yeah. So
that's my
Joe,
for call us if you want to do something.
Yeah. You can definitely go down a rabbit hole and start overthinking these things. And I think at the end of the day, what you have to do is remember you have to have a consistent process and an understanding that you can stick behind to make a decision to say, we're going to do it this way, and don't waver from that. Don't make an exception here and there. It's like with anything sales tax, you want to be consistent in the process. There's a lot of interpretation when it comes to sales tax, but come to a conclusion that makes sense, that's dependable, and that's what Joe and I can help you figure out. We do have a quick question now, I think, and I know there was another question about the drop shipper, and we will get to that one in a minute. But this one says, we invoice one day after we deliver material. So if we deliver something on 7/31, the invoice will process on 8/1. Would this be tax free? So I guess my question, and Joe, confirm what you would think, when is the payment made? Is the payment made when it's delivered on 7/31, or is the payment made after the invoice is issued? So I think that's going to determine what that answer would be.
Yeah, we're told payment before the holiday, but delivery in the holiday, no exemption. So we're told that, in the frequently asked question. We're told that payment in, but delivery after is okay. That's fine, right? So again, I think Kathy's right on here. I think the answer to your question is probably closer to when is the payment happening. If you can make that payment happen inside of the tax period, then I think you're probably okay, even if the delivery happened prior to. Again, the reason this thing is when this thing comes up is when you get audited. Your invoice probably isn't going to say necessarily delivery date, but it will say payment date, right? So I would focus on that, and frankly, close the office on July 31st, so you don't have anything that goes out. Seriously, like there could be just to make your life easy, like have a little bit of space here. Like you don't have to run all this stuff to like 11:59 p.m. on July 31st. Make your life easy. Like just say there's a little bit of buffer there. so we can really clearly distinguish the ones that are in the holiday and the ones that are out of the holiday. Make your life easy. Yeah.
I'm going to offer one more quick example that came up last year. Was, and I think we kind of addressed this a little bit, you know, the pay over time, like a rent to own scenario, if you're buying a TV, rent to own, or something bigger, you know, but if it's still under $500, how does that work? And then also subscription boxes, like you're signed up to get a, you know, a dog toy box every month. So something like that. So a subscription box, you get new product every month, you pay every month. If that falls, if there's a delivery, an invoice, or a membership charge within that sales tax holiday for that product, that would absolutely apply. But for the rent to own, think of your cell phone. If you bought a cell phone and it's under $500, if that even happens, I don't think it does. But if you do, you're paying the sales tax up front. So again, would that apply if your phone is under $500? When you're buying it, yes, but if it's just a payment that you're making to pay for that phone over the course of the life of the contract, it would not get exempted for that month. So again, it looks at what's the transaction happening and where, you know, sales tax in Ohio is always paid up front on those kinds of rent to owns or leasing transactions. So keep that in mind. So I want to ask this, well, before I'll answer that question in a second, sorry. I just want to talk quickly because I know we've thrown a lot out on questions and scenarios and how things happen. There's two things that you should keep in mind. So anyone who has sales tax software or a point of sale system or, you know, even built into your ERP, there's going to be a variety of ways you can handle the sales tax holiday setup. Some of the more robust sales tax software engines, like Avalara, Vertex, have holiday rules built in. And I say that with a grain of caution because I think you need to verify that it's actually going to work for you. Sometimes those things require a little bit manipulation, but I know Avalara last year, we have a lot of clients who use Avalara. It was already pre-built. We didn't have to do anything. We didn't have to create a rule. On 1159, it kicked in and then it went off. And it calculated based on any item under $500. So that was tangible property. So, but other systems may not be as flexible or compatible or robust enough to figure it out for you. And there's generally a way to maybe put in a rule that has an effective time and date and a transaction level. If anyone needs technology experience or how do I do this, reach out to us. This is what I spend a lot of my time doing. And we can hopefully fix your system to do it for the period of time. I knew a lot of people last year were like throwing up their hands like, our system can't do that. It's like, we can't even do different taxabilities on each line. It's like all or nothing. And so there are scenarios like, well, then maybe you have an invoice, one invoice, two invoices for a customer. One has all the taxable, one has all the exempt. You know, you could find a way to fix it so it works for you and for your customers. But again, don't wait until, you know, July 31st to try to get this going. Call us as soon as you think you have a problem or before you think you might have a problem so we can get there.
100% for sure. I mean, and in talking with some clients last year who, you know, whose systems really just had, you know, really not good flexibility or capability to do some of this, a suggestion was just turn the whole thing off, right? If all of your sales are, like, let's say you're a Chipotle and you're not selling alcohol, I know some of them do, but let's say you're like a Chipotle, all your sales are going to be under $500 per item, you're probably not getting a bunch of risk just turning the whole system off for the
right.
2 weeks.
Right.
But if you're a restaurant and a significant amount of your sales are alcohol, turning it off means that you're going to either have to self-accrue and pay for yourself the sales tax on all the alcohol, or you're taking a pretty good risk. And the state is not nice when it does audits on alcohol sellers.
Right.
Like you can lose your license if you're not in compliance with that stuff. So be careful, like Kathy said, if you've got significant sales that are going to be difficult to do in your software, and you know you don't want to take that risk, you don't want to threaten your liquor license, give Kathy a call. She can help you out, and don't wait, because we only have so many hours in the days between now and August 1st.
Right. And document. So we all know you have to file the sales tax return. The state is expecting a level of exempt sales on everybody's return who sells product during this period of time. So if they see nothing, either they think you may not sell anything taxable or tangible. You might, it might be just services that you're reporting. But the state is expecting to see a level of exempt sales being reported on this month. So they may just do a gut check and say, well, this guy, we know sells product and there's nothing exempt, so did he not comply with the sales tax holiday rule? And that could trigger an audit. Who knows? I mean, it's one of those things where you just want to try to do it as best as you can. So, but to get back to this question, and then I think we'll open it up for questions to make sure that we have time for that. But again, as Kate and Kaylin, who's helping us out here, have stated that we're going to have time, or we're going to issue questions that don't get answered, and we'll make sure that the updated FAQs that we have will be covered with any questions that don't get answered. So let's see, 90% of our sales are drop shipments. If our customer is in Ohio, we drop ship to the customer in Ohio, those sales are almost always tax exempt. But we do have end users. They purchase from our website and direct ship for their own use. Those will be tax-free. They order online, pay online. If the customer is in Ohio, but their location for use is outside of Ohio, is it still tax-free? So it's generally based on the destination. Where are you shipping it to? If the ship to is Ohio, it's going to be Ohio, and it's going to be exempt if it fits under that category. If they're shipping to a different state, that the sales tax holiday rule would not apply. So I don't know if that answers your question entirely, but let me know if you're.
Well, and one other piece of that. So, and this was actually something that we've already gotten some questions on, Kathy and I, which is that first part of your statement, you're drop shipping and they're already tax exempt. So remember, the sales tax holiday is a new and an additional thing. If they were already tax exempt, this isn't doing anything, right?
Right.
So note that. And then the last part of your question is really interesting. And this is where I've had some clients who have gotten burned by this a little bit. And the question is, so we buy it and we ship it in Ohio and it's tax exempt and we get it, right? It's underneath $500. But then we move it and we use it outside of Ohio. Mm-hmm. When you move it and you use it outside of Ohio, now you're outside of the jurisdiction of Ohio and you're subject to all of the use tax laws from Kentucky or West Virginia or wherever, and none of them care that you bought it at an Ohio sales tax, holiday. So when you move stuff and you use, and this is true no matter, this is true normally.
All the time.
Nothing to do with the sales tax holiday. If you buy something in a state where it's exempt and then you bring it back and you use it in a state that's taxable, that state will tax you for use tax. So you can't, and that's really why those rules are there. So you can't go shopping, right? You can't go shopping in a place that, for example, a state that doesn't have sales tax at all, then bring it back and use it in your home state. Now that home state is going to get to tax you. So it's nice that you try to avoid it, but it's not effective. So that is the other, I think, component of that. That isn't something that you as a vendor have to worry about. All you have to, once it leaves your hands after you've done it and you've concluded there's no sales tax in Ohio, then how they use it it's not your problem. That's their own problem.
Right. And we could have a whole other 2-hour rep or longer on use tax alone, right, especially in other states, because I think that's commonly a misunderstood topic. So, okay, Joe, did I miss anything big on the FAQs? I think when we talk about, I talked about the restaurants, there's nothing else there, split bundled. Training your staff, I think prepare your people who might be facing the public when they come in and ask about this sales tax holiday, or I want my stuff tax free. They should be aware of what they need to say if it's something like the bundled situation, like a package deal for a dining room and 5 chairs. If we're not selling it individually, line item with tax, why is this taxable when the chair would be $200? be prepared to handle those kinds of questions with your customers.
There's a whole bunch of common questions we got in here. But you want me to run through a couple of those?
Do we have more in there?
Yeah, there's like 5 or 6.
Oh, I didn't even see it. Sorry.
So I think a lot of these, maybe we'll read a couple of them, but I think a lot of these go back to that little inconsistent portion of this that Kathy and I were both talking about. And Kathy, again, 100% right. If you're getting the payment outside of the sales tax holiday, you got to be at least 50% like considering this is probably not subject to the the sales tax holiday exemption. If the payment is before, if the payment is after, I think that's really got to be like your default. You're going to have to get into one of those exceptions, like the layaway exemption or the online seller kind of thing, where the delivery and the payment is going to maybe be in a different place. So for these with the we invoice, we have the net 30 days for them to pay. Well, if you're not paying in the holiday, then I don't think it's not covered, right? Unless we have something that we're going to do that's fancier than just our normal 30-day payment terms to get us in there. I think by default, I don't think that works. Kathy,
Yeah, I think that was the thing that came up quite a bit last year, because that is the tricky situation. A lot of clients are like that. You sell it, you order, they deliver it, and then they have 30, 60 days to pay, so they're not paying until the end. I remember looking at it thinking that if they put a deposit on something, that was different than if they didn't pay at all. But then now do we look at orders that were ordered in July but are being paid or coming due in August during the holiday, would those be exempted? And I would think if you're going to apply it one way, you got to apply it the other way. So should you be looking at those invoices as, and does it matter if you're on a cash or accrual basis? Ohio requires you or suggests that you should be on an accrual base for sales tax purposes. So you're really, you might be paying the sales tax to the state before you're getting the money. So I think there are some things to talk through on those. I would say, again, it's consistency and where is the payment happening. And if it's happening during the holiday is when you get the sales tax break.
I think if you're a vendor and you would say to yourself, gosh, I would love to be able to take sales that, yeah, they're in the holiday, but maybe delivery is later, and maybe some of my customers would be interested in buying a little bit more from me in this holiday in order to harvest the sales tax exemption. My strong suggestion to you would be that's the kind of thing you should do a project, with Kathy or I, to get the things in place so that if you get to a sales tax audit, because if you're the vendor, it's going to be a sales tax audit, to make yourself safe. And then your customer too, if they're not going to have the components to protect themselves from use tax, they're not going to thank you later, when you haven't done the things to enable them to be able to get that use tax exemption as well. So if you want to, really use this for something other than a payment that actually happens inside of the sales tax holiday, call us, and we can talk through it with you and get some documents and some policies together that'll keep you both safe.
Yeah, and I would say on that, I'm going to see if there's any more additional research anywhere on that specifically, because I thought last year they did a little better in the FAQs about that kind of scenario. I know they talk about, like, if you pay with a credit card, you might not pay your credit card until after, but if you pay with a credit card, it's happening, the sale is happening then, the transaction is done from the state of the business. But when you have terms, is that enough? Or does the payment have to be made within that period? So I think this is one of those gray areas, and there always are those gray areas. What position should we take and be able to apply it appropriately? So, okay, there's another question. Yeah, go ahead, Joe.
I think Kathy already answered one of these, so that we've got a couple of rent-to-own questions. So on the monthly rent-to-own payments, are those monthly payments considered exempt? So again, as Kathy mentioned, if you've already signed the agreement, it's a long lease, and then you've got the purchase at the end of it, the sales tax is already front loaded on those kind of lease to own sort of deals. But what if it wasn't a lease to own? What if it was just a straight old lease and you had the ability to turn it off from month to month? Now that would fall into the same kind of exemption that Ohio has in there for like subscription boxes. So like if I have a Bark box or something and I get one every month, it's tangible property, it's under 500, but they charge me every month, but I haven't, it's not for the whole year. I can turn it off. They charge me. Now we have a situation where that one payment that happens to fall in the holiday, that's going to be okay. That one's going to be tax exempt. But if you've already signed the thing and you're stuck in it and you can't turn it off, it's just a payment on, then I think, as Kathy mentioned earlier, I think that one's outside the holiday.
And I think if you bought the shed, the monthly rent to own payment, you bought the shed and it was under $500 in that when you bought it, you know, when you signed the contract with it, you wouldn't pay the sales tax on it. So those monthly payments would not include sales tax because you're buying it on that under the holiday if a shed is under $500. But yeah, I think the other part was, did we cover that one too? Oh, the labor to install is also itemized. Yeah. Yeah, I would say on the installation labor for the parts that are itemized and the labor is for those parts to install, as long as they're all under, you know, $500, yes, I think that would be correct to turn it off. Yeah, I would agree with that you would probably turn it off for that period of time.
So the next one that we have there is this repair aspect. And this one's real interesting because, again, this one is pretty new from the state's perspective in terms of putting out this guidance. There is a specific frequently asked questions on the Ohio Department of Taxation's website. Go and check that out too, in addition to our comments, because that's going to give you like their specific, they have a pretty good example on that particular one. So it sounds like we're repairing, is it cars? Might be cars. There are, we repair items, and this includes an itemized invoice. There are parts like bearings or seals, multiple labor codes like balancing, washing. There's other labor codes for total labor to take things apart, putting it together, delivery. How would we kind of identify the things, you know, et cetera. Okay, so first, remember, this is an add-on to the existing rules. So normally, if you would not charge tax on some of these things, continue to not charge tax, right? So if some of this labor is normally exempt, example, the things you're working on are exempt, like an exempt manufacturing machine or farming equipment, all that stuff still applies, right? So nothing is changing with that. If you'd have a situation though, where you would be in a situation that the thing normally would be taxable, but we're selling components and then we're doing the repair services, I think that's back to what Kathy kind of mentioned, which is you've got to look at whether or not those separately stated items, if all of those items are exempt, and then all of your repairs are going to be exempt because the repair or the installation is connected to a particular piece. Like, again, I'm not a big car guy, but installation of a new tire. The installation on the new tire, yeah, that should be exempt. Total engine clean and repair, if it's clean and it's not repair, really, it's cleaning, I don't think that comes into this rule we've been talking about. This rule is about repairing and installation. Those are the dependent things. Washing and cleaning are not dependent services. Those are just either taxable or not, depending on what they are. So I think that one's a real interesting one. I think you're going to have to look pretty closely at, like, if it's a tire and you're installing it, I think you're good on that installation of the tire if the tire is under 500. But I don't know that I would get all of the services in that particular mix and say all of them are exempt. That's one we kind of have to work through, I think.
Yeah, and I think, Joe, do you think the items like the bearings and whatnot that he mentions have to have an associated price in order to be like charging it through versus just we're using these parts, but we're not really itemizing the parts from a cost perspective?
Yeah, I mean, I think on that one, like if you want to say, here's a bucket of parts, like bolts and screws and rubber bands and total price $499. The fact that they're not all separately stated, I don't know that that would make a difference on like an audit. I would argue, well, I don't have to tell you it's a 7-cent bolt. Of course, that's under 500. This is like 100 parts and they're under 500. I think that'd be sufficient, probably. But you can't just say repair and installation. Then you're back to that rule that Kathy mentioned, which is you don't separately state it on the invoice, you're screwed, right? Because now it's over 500 in the aggregate.
I know we're running up on time, and I know there was one more question here and that I would get to, and then Kaylin, we can wrap it up. It was another repair example, and again, there's that $1 state. It says another repair example: $100 tire, $20 install, $5 tire disposal, $1 state tire fee. Is the $5 tire disposal tax exempt? So that is an interesting question, because typically I would say no, because it's usually a part, like an excise tax is an add-on tax. It's not a tangible product. It's not a service. It's just something, it's a fee you're being charged. I'm not sure that that would be exempt. What do you think, Joe?
Well, I would say the $5 tax disposal fee, like you said, like that fee itself still needs to go on the invoice because it has nothing to do with sales tax, right? So this is not doing anything different from that perspective. But for sales tax, if that particular thing previously has been part of your price of the piece, then I think it would come out of the sales tax base because you're just including it in the price, right? So if it's part of the price and it's under 500, then I think you're good. But I would definitely agree with Kathy on the actual fee itself. That fee has nothing to do with sales tax. That fee needs to continue to be there. But maybe you wouldn't charge sales tax on the $5, right? If that's your question, I think that would be true.
Okay, I don't see any other messages in the chat. I want to remind people. Was there, or someone just point to something? Oh no. I just wanted to mention that. Yeah, here we go. You know, we have on our website an FAQ that we compiled, which is, you know, there's a little bit more examples in there for that the state doesn't provide, but the state also has a really good FAQ out there, and you know, we're here to help. You know, our contact information should be up on our website as well, and I think it's on the slide here, and I'm not sure if it's on the handout, but you know, we're here to help sooner rather than later. Help you get situated so that it's not, you know, a massive crisis mode at the end. Caitlin does mention that there are more questions, but I think what we'll because we want to be conscious of your time and we're already going over, so we will provide answers to that and send out the updated FAQ or post the FAQ so you'll have those updated questions. But again, reach out to us if you need anything. We're happy to help, and happy holiday.
Yep. One last thing for me as a consumer, go and have fun and buy some steak and buy some, you know, various things, have a good time, explore all the wonderful vendors that we have here in Ohio. On the business to business side, again, my caution to you would be careful. If you want to run something by us or you'd like us to fix it for me, Joe and Kathy, so that we can accomplish this for our clients, definitely don't go it on your own. And one final thing on the frequently asked questions, this is the best that Kathy and I have based on what the actual rules are that Ohio Tax has put out. We might have a little proviso on there, but you know, please, we're dealing with this the same as you are. This is not everything on the frequently asked questions is either stuff that the department has given us, our opinions on stuff, but you know, none of this has been tested like in an audit situation or in case law or anything. So, you know, let us know if you have something that you're reading and you're like, man, I just don't get that. How can I apply that to my business? That's the time to call us and we'll talk to you about relative risk, how firm something is, or how maybe aggressive it might be. So as Kathy said, I would echo that. Enjoy the holiday and we'll see you next time.
Thank you.
Thank you, everyone. We will be sending a follow-up email of the recorded session and further questions being answered via email. So thank you. Have a great rest of your day.